Internal Revenue Service IRS tax news. Taxpayers should know and understand their correct filing status. IRS Tax Tip 2020-130, October 1st, 2020. Taxpayers need to know their correct filing status. There's a link to that here, and be familiar with each option. So the filing status is going to be a major component of the tax return. It could have an impact on your tax brackets in the progressive tax system, could have an impact on basically your adjusted gross income, and that could have an impact on the calculation of how much credits you might get if you are able to get a credit, and deductions. So the major filing statuses are typically the most common ones are single, married, head of household. So generally the taxpayer's filing status depends on whether they are single or married on December 31st, and that determines their status for the whole year. So notice the most common situation is we have two single individuals filing single, and then they are married, right? So once they get married, then you have a married tax return. Typically, the filing status would then be married. Question then would be, well, when would that happen? Well, that if you got married in the middle of the year, or you got married all the way up till December, the IRS would see you basically as married for the entire year. So you can get married in December, and the IRS would still see you as married for the entire year. So note, you might say, well, if I got married in December, shouldn't I have an option? Because I was like single the whole year, maybe I should have an option to file single or married at that time. Or if I am married, can't I still go back to filing single if I want to? The general answer is no. You can't file single once married. You might be able to file married filing joint. I mean, you could file married filing joint, but it doesn't have the same kind of benefits oftentimes as filing single. In other words, you may not be able to take some of the deductions, such as the deductions that are going to be, or credits that are refundable credits might not be applicable if you file married filing separately. So once you're married, you still have an option to file married filing separately, but that's not really the same as single. Oftentimes you will have a benefit to file married. So normally, and from a tax standpoint, note that if you're the IRS basically, and you're thinking about, okay, two people were separate, now they're one entity, we're going to see them as one entity, you would like to set it up in such a way where it doesn't burden the people to get married. I don't want to have a tax burden for them to get married. In other words, I don't want them to owe more taxes if you're the IRS to get married. But at the same time, you'd want it to be neutral. If they got married, you would like to set up the system so there's no burden or no problem once they get married. That's obviously difficult to do. That's kind of like the objective. But I would like to, if it was me, I would like to err a little bit on the marriage benefiting, not being a problem, not being a burden, not having more of a tax benefit for getting married. But it can work out either way, just depending on where people stand. Now, if you get some refundable tax credits, like an earned income credit when you're single, or possibly a child tax credits that you would receive beyond the amount that you put in, beyond the amount of taxes that were paid, then you could end up with a tax burden to get married, which is not good. Well, generally, I would say that's not a good thing generally, but note, you could have an impact tax-wise getting married. So you want to basically take into consideration the impact of getting married. Once married, then you have options, but you don't have the option of going back to single. So notice, if you go through the progression of someone's life, you would think, if you're a child, you're going to be a dependent. You're a dependent and recorded on the tax return of the parent until you're an adult, and at that point you would be single, and then at some point you get married. If you're married, now you have the married filing joint with the opportunity to file married filing separate. And then if things go wrong for whatever reason and there's a divorce or something, then if you have a child, you might be head of household at that point, might be able to file head of household as opposed to single at that point in time, which would be a better filing status typically from a tax standpoint. And those are the major filing standpoints. And then if someone died, you might see qualified widow or qualified widower in that type of situation. All right. However, more than one filing status may apply to certain situations. If this is the case, taxpayers can usually choose the filing status that allows them to pay the least amount of tax. So if you're able to qualify in some situation that's kind of on the line between different filing statuses, then you may be able to file for the one that would owe the least amount of tax, is what you would be shooting for. When preparing and filing a tax return, the filing status affects if the taxpayer is required to file a federal tax return. So if your status changes and you weren't required to file a tax return before, it could have an impact. Maybe you might be required to do so now. if they should file a return in order to receive a refund. So obviously, you might have a refund in the mix here. The standard deduction amount, so how much your standard deduction will change. Obviously, if you're single, the standard deduction is going to be a lot less. And the standard deduction is like everybody gets a normal kind of standard deduction unless they're able to itemize. So that's like they just give you this deduction. Everybody just gets the same deduction, the standard deduction, unless you have the itemized deductions. Now, the standard deduction will change with changes in the filing status, which of course makes sense, because if you have two individuals that are now taxed as one because they're married, then they're going to have a different standard deduction. If they can claim certain credits, so the credits again will change. So, and that's one of the major things that change, especially those refundable credits could have an impact. So when you're looking at if the credits are a significant part of your individual tax return, then you want to consider what the impact will be when married, and just be prepared for that. The amount of tax they should pay. So here are the 5 filing statuses. We have single. Normally the status is for taxpayers who are unmarried, divorced, or legally separated under a divorce or separate maintenance decree governed by state law. So single will typically be, again, if you start off in life, you're going to be a dependent at some point in time. You'll be single at that point. And then you might get married, and then you'd be married. If you got divorced after you'd be married, then you could be head of household. If normally that would be if you have a qualifying child at that point. If not, then you might be back to single at that point in time. But there's always then a question of, well, what does it mean to be divorced or separated? Obviously, if you're divorced, you're divorced, but legally separated, what does that mean? It could change from state to state as to whether or not you qualify for legal separation if there hasn't been like an official divorce, and you have to consider that. Married filing jointly. If a taxpayer is married, they can file a joint tax return with their spouse. When a spouse passes away, the widowed spouse can usually file a joint return for that year. So married filing joint, obviously now you're married, you got two people together. Normally you would want to file married filing joint. That's usually the best benefit. You can't generally go back to filing single, so you don't really have that option. You may be able to file married filing separate, but that's not the same thing as filing single. It might not have all the benefits that people might be looking for to go back to single, which would be oftentimes those kind of refundable tax credits. So your options once married are usually going to be married filing separate. And then what if the spouse dies? Well, then you have the widowed spouse can usually file a joint return for that year at the year of death that took place. So married filing separately, married couples can choose to file separate tax returns. When doing so, it may result in less tax owed than filing a joint tax return. So you might want to check married filing separately. There could be circumstances where the married filing separately results in less taxes. So you can test both ways, married filing joint, married filing separate. I think married filing joint is typically more beneficial, but when you file married filing separate, you get into some confusion oftentimes because the IRS is a bit skeptical that you're going to try to game the system by taking advantage of tax credits that have lower limitations and whatnot. And married filing separate can change also on how it might be done from state to state. So you want to make sure that you're in compliance with the married filing separate. So that's your other option if married. So head of household. Unmarried taxpayers may be able to file using this status, but special rules apply. For example, the taxpayer must have paid more than half the cost of keeping up a home for themselves and a qualifying person living in the home for half the year. So that's generally if married and then a divorce happens or something like that, right? And then that would be the general situation. You might then have custody of a child at that point that could be a qualifying child. If that's the case, then you may be head of household. Why does that matter? Why would that be better is that better than anything? It's better than single. Head of household is better than single because it could affect your standard deduction and whatnot for your filing status. So that will generally be better. Now, when divorced, obviously there's going to be questions oftentimes because the custody of the child might be split 50-50, which is that's kind of normal. So then the question is, well, who, if that qualifying child would qualify one or the other for head of household status, then the question is, well, who's got the head of household status on that in that situation? So that could be a problem, but the general rule is that you'd have someone that's dependent there, and oftentimes that's a qualifying child for half the year. So a qualifying person, they say, living in the home for half the year. So that would be a more beneficial status typically than single. So qualifying widower with dependent child. This status may apply to taxpayers if their spouse died during one of the previous 2 years and they have the dependent child. Other conditions also apply. So the general rule here, you're married, someone died, if they died within this year, one of the spouses, then the other spouse would typically get to file married filing joint, which would be a better filing status in the current year of death, and then possibly 2 years after, if there's a qualifying child, pick up the qualified widow or widower filing status, which could have more of a benefit, be kind of like filing married, and that would have a better standard deduction, better tax rates and whatnot typically there. So more information you can find on Publication 501, Dependents Standard Deduction and Filing Information. There's a link to that here. There'll be a link to this in the description.